Hi everybody, welcome to the Baguette Investor channel for a new video. Today this is the weekly review and this is also a sequel to the previous video that's speaking about risk management. So if you're interested into risk management, please stay with me and we're going to talk about this. So for my weekly performance, I am still in the rangiest range since basically May 2021. You can see my performance is going around 25% and I've still not managed to get above 25%. So yeah, that's how things are right now. It's really because either stocks or cryptocurrencies are not trending markets. So I'm just waiting for the moment the market conditions will be favorable to me. And I want to introduce a new risk management thing because I know I'm trying to cure my my ability that I'm just always constantly trading when there is no need to. And one of the things that I can cure my will to trade all the time is to implement good risk management. So even if I trade all the time, it's not gonna blow my account. So last video we saw that in order to save your hard-earned money, you need to adopt a different risk management when the market conditions are not favorable. So when you have a market that is in a range market, that is choppy, that has no certainty, that investors do not have a clear direction to follow, you reduce your position size until the market conditions become favorable again, and then you'll be able to increase your position size. And we're going to talk about something that is the sequel to this, and that is even more complex. So we're going to take a trade example that is Engine. So if you don't know about my trading style, I chase breakouts. So you clearly see the breakout here on Engine. I hope it is clear for you that right there we have a nice breakout. And what I do with breakouts is that I set my stop loss. So my entry price is the white line right there. My stop loss is the red line right there. And my first step on my trade is this line right there. This is not the take profit. This is the first step of my trade. What happens on a trade is you take a trade. There are two possibilities. It either ranges or goes up, and it either stops and takes you out of the trade. And this is where this thing right there comes into play, where reducing your position size is very important in a range market because your success rate is low. If you didn't see the video, you can go and check it. It's very interesting. So what people do is that they have the same trading algorithm despite the market conditions. So take a look at this market, for example. We're going to go into the 4 hour so it's even more clear. Look at this market. This is a very directional market. This is a market where investors are confident into the direction they're in. You know, most breakouts during the trends actually work. There are some breakouts that fail, but most breakouts during all the trend actually work. And it all depends on the market condition as a whole, if a breakout is going to succeed or not. Usually, if a breakout happens during a bull market, it works. If it happens during a range or bear market, it does not work. So what people do is that they chase breakouts. So they take all the breakouts they see, they take the breakouts, and they have the same trading style. So for example, my trading style in normal market conditions, I'm going to have to put this colorful so you can clearly see it. Oops, sorry, I have my alarm ringing. There you go. So your trading style would be you enter here, stop loss is here, and your take profit would be at 3 times what you're making. So we have to understand the notion of R. R is the portion of risk. So you take this unit is 1 unit of risk on the price. Because if the price reaches this is the R. There you go. This is the R. If the price is fucking hell, I have so many messages. Sorry, I'm going to put this on silent. There you go. If the prices go down, you're going to have a loss of the risk associated to your trade. So in the case of this trade, it's 0.25%. This is what we were talking about right there. It's how much risk you take on one trade. And this is what we call R. The name we call it is the variable R. Just like in math, you would say X or Y or Z. This is R. And R moves according to the market conditions. We're right. Okay, you're with me. Let's say you've learned this and you move your R according to the market conditions. But now, what most people do is that their trading algorithm is going to be this. They take a trade and they sell all their shares or all their crypto when they reached 3 times what they were willing to make. Or they sell 50% and after that they let the rest run. They will have the same trading strategy for every market condition. But the problem with this is that when the market is directional, you see this kind of strategy works very nicely, because if you try to trade the directional market, you buy the breakout and the trade goes. The problem is when you get a no longer directional, that you take trades and you're going to have this kind of strategy and you're going to set your take profit at 3 times what you were making. So I hope you understand what I'm saying. You can see the number right there is 3. So it means this unit, I'm going to draw it. It means this unit right there, which is the R. I'm going to draw it again. R is 3 times above. So if I take this, boom, you can see it's going to be 3 times. 1, 2, and 3. If you think they are not the same line because we have a log chart, okay? But if you print a arithmetic chart, it's the same length. Okay, we're clear. So this is 3 times. So you have 1, 2, and 3. People expect that their trade is going to reach the R1, but when you have a range market like we have right there, this kind of market here, very, very few trades reach the R3. They reach most of the time the R1, but never the R3. So what happens is that you're going to take trades and you're going to have fake breakouts. Every time you're going to have fake breakouts. It's going to take a breakout and then gets back in. It breaks out and then gets back in. I have so many examples of this into, for example, the stock market at the moment. You can see we have a perfect example right there of, you would be seeing this as a breakout. I don't know if you see it. I'm going to remove the earnings display so you see it better. Boom, there you go. You can see a breakout and then boom, goes back again. I'm going to check another stock that is a very good seeing of this. What's it called? I know there is someone. Yeah, there you go. It's right there. Look at this. You're like, oh, well, breakout. And then boom, canceled. And in a range market, this happens most of the time. Most of breakouts are failing and don't last very long. So we're going to go back to our engine chart. There you go. So the thing is, the problem with this strategy is that you're having the same trading algorithm in directional market right there and in range markets right there. So you could say this is a directional market right there, but considering how the whole altcoin market is trading, this is not a directional. If you look at the Ethereum chart, you can see that we are not in a very strong directional market. The market is very weak. If you zoom in on the 4 hour, you can see here the market's trending down. This is just to be clear. So what's the solution to this? Well, very easy solution, but most people won't do it. Because you separate your risk management in a range and in a bullish and in a range market. What can you do? You can change your trading algorithm in a range and in a directional market. So in a directional market, you would say you would sell your shares at 3 times what you were risking, 4, 10, I don't know, whatever. And in a range market, you would decrease your trading algorithm to 1 time what you were making. You are going to sell like all your position at 1 time what you were making. You're going to sell half the position at 1 time you were making. Or you're going to sell 25% the position at 1 time what you were ready to lose. This will allow you to get less and less fake breakouts and more real breakouts that will finally end up losing. But because you take the profit there, the move that you take at the end is no longer going to hurt you like it did before because you didn't take any profit. When the market is very strong, you need to let the profits express themselves. So you need to be able to take the profits high. But when the market is weak, you need to be as weak as the market and take the profit when they are early, because you know that in the end there is a very high probability that the market turns back on you. So I think this is a very interesting topic to cover, and most people don't really know about this. And I think more people should know about this. So if you agree with me that you should have a risk management depending on the market condition, there is also a very good way that you could have a trading style depending on the market conditions. Hope you agree with me, and then we're going to finish the video with the technical analysis, and I think it's going to be an already interesting video. So the weekly chart for Bitcoin for me is just, I can't trade this market. This is not the kind of market I know how to read. I just read the horizontal levels, but you can see that Bitcoin is really struggling. It has no clear trend, no strong momentum. It makes deep corrections, very different that from the past. You know, if you look at this trend, you see the corrections are not deep, they're strong, they're linear, whereas when you have a deep correction, it's usually a sign of weak momentum. You can see that we're doing the same thing. We're doing a weak correction. We're getting back into the range, what most people didn't want. Very laggy trend on Bitcoin. And Ethereum, on the other hand, is a much better looking chart. On the weekly, you can see it's holding this support level very well. So I'm very happy about that. As long as Ethereum and Bitcoin remain pretty bullish, I'm good for the crypto markets. And you also have the total market cap that is looking like Ethereum, looking great. So for now, the market is not bearish. Of course, if we start to see the 4-hour of Bitcoin breaking to new lows and printing a new bearish trend, this is going to put an end to this cycle. But there are assets that are trying to break out and look very good, which is the metaverse coins. There is still some trading opportunities, even though, as I said, the market is not going to give you amazing breakouts. So you have to really be cautious about the breakouts you're taking. But you can see I found some great looking charts. There is still some opportunities, but it's not a very good directional bull market. And when in terms of stock market, we're going to look at the S&P 500. We didn't have any correction since March 2020. So this new variant narrative, I would be very happy that we make a correction. To be honest, it would be much healthier to get a big flush, big correction, nice for like 3 months, rather than having another choppy market. Because if you look at the real data, I'm going to show you this. This is the percentage of S&P 500 stocks above the 200 moving average. So this is the long-term bullish trend. You can see it's just been going down. So actually, the market is not really trending. There's no strength in the market. It's really boring. If you look at small caps in the US, it's so boring, this market. Like, look at this. We had the possibility to have a breakout, and then we had a fantastic fake breakout. So it's very boring. I'm sick, really. Can you please give us a nice bull market? So yeah, please give us a correction. I would be, frankly, seeing minus 20, 25, 30% from here, I would not be sad. I would be happy, because it would mean finally the market is flushed from all the bullshit we've seen. You know, imagine we retest this previous area that goes down 22%. That would be healthy. People would panic, but that would be healthy on the market. So yeah, I am still very struggling on stocks because, well, the market just does not have any strength. Look at this. You see, oh, there you go. You see the market does not have any strength since April 2021. Nothing has happened. So yeah, I hope you found this video interesting. Try to present to you some advanced trading strategies. And I think it's important that if you're, like me, willing to become a professional trader, you understand these basic mechanics. And in the future, we're going to go more and more into the detail. So that's it. Thank you for watching. See you in the next video. Have a great day. Good week of trading. Remember, risk management is the key to this process. Goodbye.